morning everybody, it's Christian from Serene Education with the 4 majors notes update for the 24th of May 2012. Hi guys, starting with the euro against US dollar this morning for the daily. Let's have a look and see what's been happening, and wow, has it been happening. Last 2 days has been manic. 2 negative candles, which as I mentioned yesterday in my video analysis, we wanted to see a nice break below the 126500 to get a definite confirmation that things were really looking seriously bad because of what Greece is doing recently, really dragging its feet. And sure enough, we got a nice breakout to the downside. A lot of news filtering out through yesterday morning. Crunch talks with Greece, well, as problems. Are they going to be in it? Doesn't look like they're going to be in. And apparently word was making around that the IMF or the Euro guys are saying, listen, get your contingency plans ready if Greece was to leave the Euro. So things not looking too good at the moment. If it was just speculative news, then it really moved the market, and it moved the market in a negative way, breaking a very strong price support and resistance level. As I zoom out, you can quite clearly see we haven't seen these areas being reached or breached since way back here in 2010. So not looking good for this pair. Recently we had a nice little bounce in January, and that has now been broken. So not looking good. Nice move to the downside, pull back, and now we've seen the continuation and that continuation. So if you saw a Fib extension on this, so this will be high to this little bounce here at 1265, little bounce higher to this top over here at 1283 and change. Then we've seen the extension now break lower. These are the areas, 38.2 being reached yesterday. Look at that, fantastic. Break below that would target the 50% mark here at 1250. Then a break of that would see 61.8 at the 1243 and change mark. And then ultimately way out, you want to see 100% of this extension. Where does that extension take us to? Believe it or not, prior support and resistance way back here that I mentioned in August of last. So you can see how everything pans out. Fib extensions looking good at the moment, so please don't look for any shorting opportunities. We might see consolidation because of this break to the downside here. If we see consolidation, then look for those entries to the downside. And as it looks now at the moment, now everything is looking favorable for downside. CTC is in our favor. We have our red arrow, red candles, moving average is all above price, and most importantly, this indicator here and the bottom one is telling us it's a genuine sell. Okay, as long as that's red, then we break in price support and resistance levels. We are genuinely in a sell setup. Slight consolidation on the Asian session last night at this the 38.2 Fib area. Get a break or close or trading below that going into the US session. Look for your 50% mark down the bottom here as your first target. Next up, cable, and the same like its European counterpart, falling like a stone. Look at this momentum, guys. Most of May has been just falling. We've fallen from 16,300 to 15,700. Each increment over here is 50, so that's 50, 100, 150, 200, 250, 300, 350, 455, 556. We've dropped 600 points in the last month. Literally 3 weeks. Absolutely crazy. So things are not looking really good for this pair, as we came up with news that sterling was back into a double dip recession. Figures, contraction across the board in terms of unemployment, productivity, etc., all looking really negative for cable, and that's pretty much because we are really relying on the European community as well. So things aren't looking good here, and we did a lot of work getting above 1600. However, that's failed to materialize. No bounce over yet 1600 after this breakout. Really massive selling to the downside, and in doing so really setting us off for things to come. So if you look at the overall trend, nice little move from the upside here to this pause, and then there we go. 100% of that would be our initial target, which happens to take us back to these lows that we saw here in January of this year. Same like its European counterpart. First move, the consolidation. Now we're going for the second move, guys. We've broken through the institution moving average of the past 2 days, really moving away from it rapidly. Asian session trading slightly lower this morning. However, 38.2 here at 1565 would be your first target, and that happens to be prior support and resistance. Break below that would target the 50% mark here at the 50.57. Break below that at 61.8 would see 50.50 being reached, and ultimately all the way down here to 15.300. Okay, guys, I don't want to see any buying opportunities. Okay, I don't want to see anybody telling me, listen, there are buying opportunities, should be looking for longs. At the moment now, the momentum is strong negative downside. Okay, so look for an opportunity to the downside and take them when they appear. If not, then you're seeing consolidative profit taking, so it'll be consolidative, and then we should see another extension to the downside. Up next, Swiss franc. This one moving higher, really moving higher. All-time low there in August of last year to the current high way back in early Jan. And you can see the price has really been moving higher, and recently you've seen price pulling back, but recently we've seen a move. And as I mentioned to you yesterday, our 960 would be our ultimate target, and sure enough we've been hitting that. The slight pause just recently, but we've seen all of Wednesday and Tuesday really moving higher after Monday's little slight pause here above the 935. It's had to maintain above 935 in order to still be considered positive, and sure enough we had higher swing, and swing high has it been doing. All the moving averages below price, acting as great support. Most important, we have everything that we need for our counter cash system in our favor. The blue arrow, blue candles, and most importantly the CTC breaking above these areas on the way up to the upside, and sure enough really punching towards 960. We get to 960, could see consolidation. You are seeing a bit of hesitation towards the end of the day. Here, a lot of movement through the Asian session, right through the European and into the US. However, just slightly putting back as we head into this 960 mark. Again, on the Asian session this morning, a lot of momentum to the upside, but slightly putting back on the European Open. So all that means is, all that stands now is anyone looking to trade this, you're a bit late to the table. All that needs to be done now is we need to see this moving steadily higher, wait for a confirmation break above 960, and then we could be looking for longer runs to the upside. Because as I pan out, you can quite clearly see that price has been in a very negative sentiment move recently. We've broken all those, and now if we get a break above that 960, then we should be targeting areas around 980, and all importantly the 1. Get above 1, then we should be looking at 102, 50, etc. to the upside. So looking good. We could see a slight consolidation here, so I would stay away from this one at the moment. Wait for that definite break above 960, otherwise you could be faked into a potential pullback. Last bit of the day is US dollar, Japanese yen. Let's have a look and see what's been happening in this one. Here again yesterday, very indecisive, very mixed signals. We've had a bit of selling off, and then we saw a bit of buying, and then we saw another sell off yesterday. Very indecisive, and that yet again coming around this 80 mark. A lot of hesitation around the 80, which happened to be a very strong support and resistance level over the past couple of months, and a lot of hesitation. Swing lows into this setup after making these major highs just recently. Price really shooting up in February, right up towards the 8400 mark, which happened to be a very strong price support and resistance level. And since then, price has just been falling. Our CTC started to match up. However, we started selling into this major support and resistance. We were looking for a potential bounce to occur. All it did was it just consolidated. Just went sideways, and then we had this massive bearish engulfing all of this indecision here at the 80, a potential support and resistance. And then we sort of started to look into, for a shorting opportunity. 61 got in the way, then we had a bounce back. If you're looking to enter this candle here, your stop should have been above this area here at 80.5, so you'd still be in this. And sure enough, we found further resistance yesterday at the 80 mark. So psychologically, 80 still happens to be a very strong resistance level for this pair, and as long as it maintains, or price maintains below the 80, we should be looking for nothing more than shorting opportunities. Back towards the 7900 would be a potential target here at 61.8. Break of that would take us to 7850, which would be the institution moving average trading. 7800 is prior support and resistance, very strong prior support and resistance level. And below that, we're going back into the consolidative range that we saw this particular pair trading for a number of months. Through August of last year, right through until February, price just consolidated, just traded sideways in this consolidation way, with a lot of intervention in between by the the Japanese government. Intervention, and we got down to the bottom here. There was talk of intervention here back in February, but some smart figures from the US economy in terms of the employment figures were really strong, really pushed us high. So Not looking favorable for the pairs across the board today. US dollar, the Swissy is probably the only one looking really positive. The rest are all looking a bit shocking. So look for those opportunities, guys. We are heading towards some major support and resistance levels on some of the pairs. Make sure you follow the rules of this particular template and you back them up with sound money management, guys. Make your trading simple. Okay, it's very simple, guys. Just apply support and resistance, look at trend lines, look at where price has been and where it's going to. Okay, that's what we want to do. We want to paint a picture, and the clearer that picture becomes, the more profitable we will be going forward. Okay, don't try and second guess the market. Look and see exactly what it is. Look at candlestick setups. Look for bearish engulfings or exhaustion candles. Where are these exhaustion candles coming at? Are they happening at support and resistance levels? Are they major support and resistance levels? Get a feel for it, guys. Candlesticks will tell you a hell of a lot about market sentiment. Okay, so keep it all simple and you will be, I guarantee you, more profitable going forward. So enjoy the rest of the day. Another third day of fantastic weather here in Wales. I know what it's like for you guys for the rest of the world, but it's fantastic here. I'm going to go enjoy a bit of it this afternoon, and I'll see you first thing tomorrow morning. Until then, trade serenely.